Hey everyone, Ark Invest, back to another Roku video for today. So the dispute is finally over, so we can move on of that. If you don't know what I'm talking about, the dispute between Google and Roku. So last week, Roku put out a tweet. Effective today, we have agreed to a multi-year extension with Google for YouTube and YouTube TV. This agreement represents a positive development for our shared customers, making both YouTube and YouTube TV available for all streamers on the Roku platform. Now, obviously, that's great news for users, or potential users, should I say, and shareholders as well, because the stock has reacted positively, and this is great. We can finally put that to bed. Now, a small reminder of how good and how well Roku's business is doing. We're going to have a look at their past quarterly earnings. Just a quick overview. By the way, if you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. On the way to 20,000 subscribers, and I would love it if we can reach it before the end of the year. So maybe hit that subscribe button. Let's go and look at those numbers. So total net revenue grew 51% year over year to $680 million. Platform revenue increased 82% year over year to $583 million. Gross profit was up 69% to $364 million. Active accounts have reached 56.4 million, a net increase of 1.3 million active accounts from Q2 in 2021. So that's quarter over quarter. Streaming hours were 18 billion hours, an increase of 0.7 billion hours from Q2. And average revenue per user grew to $40.1, up 49% year over year. And the Roku channel was a top 5 channel on the platform by active accounts reach. So in case you forgot, you can clearly see that Roku as a business, as a company, is doing extremely well. Yes, the stock might be down a lot. I believe it's 40, maybe even more year to date from their all-time highs, but the business itself has been doing very, very well and will continue to do well because, well, first of all, management is great. Second of all, the product as well is top class. Now I'm going to show you a little bit what happens when people talk about, oh, Google has maybe a superior product. TCL has chosen Google, so maybe they'll leave Roku behind. We're going to have a look at something that happened last week. But first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, so now we're back. So we can see here that this was news from last week, December 9th. Best Buy pulls TCL Google TVs amid complaints of slow and buggy software. This was supposed to be the Roku killer when this was announced quite a long time ago. Clearly, it is not. This is a post on Reddit talking about this issue, talking about why he actually loves the Roku OS. But TCL has already rolled out several software updates meant to improve performance and stability. They said here, our priority is to deliver an optimized user experience with Google TV and have a cadence of planned software updates for TCL devices. But as of last week, Best Buy, the exclusive US retailer of the TCL Google TVs, has abruptly removed both models from its store listings. TCL's own website has a link to Best Buy that no longer works. And prior to that removal, the 65-inch 6 series had an average review rating of 3.5 stars. Not horrible, but not great as well. Many reviews praise the panel and mini LED picture quality, but go on to list issues encountered with the software. So just because you have the name Google or Android TV does not mean that you're going to be a success. Obviously, this news that TCL and Google partnering up for this new series was already old news. When that came out, everybody called it, oh, this is the Roku killer. Clearly, it's not killing anything besides its own product. Now, next year, Sharp, the TV maker, is re-entering the US market in a partnership with Roku, so that's exciting. Have a look out for that. Now let's have a look at the RKK ETF and see where Roku stands. So a bit surprising to me, it's back at number 2. Number 1 is still Tesla, 3 Teladoc, 4 Zoom, and 5 Coinbase. But you can see here clearly Roku has made its way back up to number 2. And if you want to see this past performance, you can see, hopefully you can see, Roku was number 3 before, then went 4, 5, 6, and since then it has made its way back up to number 2. Now I want to make it very, very clear, just because Ark has high conviction of any stock does not mean that you have to have a high conviction of that stock, and it does not mean that this is going to be a successful investment. In this case, I do think that Roku will be a success in the coming years, especially now that the stock price is down, I think 40% since its all-time highs. Now again, do your own due diligence, but that will be it for this video. Let me know down in the comments below what you think about Roku. Have you been buying? Have you been selling? Or maybe are you a Roku user? Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.